that you're not going to make money buying gold. You have to sell it short. The economy does not necessarily repeat, but it does rhyme. And at that time, 1978, if you look at the charts, 77, 78, when we gave a buy signal on gold, it just soared. I remember we started buying it at $123 an ounce, and eventually, 2 years later, it was $800 an ounce. So very similar to now. And at that time, also people went, what is making it go up? Well, it was all the artificial money that the Federal Reserve had put into the system several years before. See, it takes a long time for this to emerge. And the Federal Reserve said we're going to fight inflation by raising interest rates. Yeah. Jeremy, we work a lot with cycles, and there are short-term cycles and long-term cycles. And, it's amazing how they work sometimes. And, cycles to shift to the left or to the right usually. But there was one cycle study we did on gold in 1980. And we had to go back to England to get more years because we only had about 200 some years of U.S. history in gold. And so we went back to England and added another 150 years to that data. And the conclusion was in 1980 that this is the top in gold and it's going to be a 20-year bear market. And people thought it was crazy. We had to make a lot of money buying gold. They said, you're not going to make money buying gold. You have to sell it short. In fact, we had one person, a very wealthy person from South America. He came to us and he wanted to buy gold because he had heard it was going to go to $3,000. He said, no, the way to make money and it goes traded on the short side. We started trading on the short side. Over the next several years, he made millions of dollars with us trading. He would call every day for consultation. And we made a lot of money for him on the short side of the market. And the bear market was exactly 20 years. The bottom was in the year 2000, 20-year bear market. Nobody would believe that would happen. Okay. Then we said in that 1980 study, we said that would be followed by a 31-year bull market. And what will cause it, we have no idea what will cause a 31-year bull market in gold. Here we are. Now we see it. Infinite money printing. That's what it is, And we're in it. We're in that same phase now where we get that acceleration up move. Everybody says, oh, I'm going to wait for a dip. I'm going to wait for a dip. And it keeps on going up. Doesn't produce the dip that people were looking for. It's the only real money. It's the only real money in the world.
Right. You've also talked about how gold is obviously benefiting from this weakening dollar and this whole growing uncertainty in both credit markets and equities. But Bert, you've warned that if the market volatility forces more liquidation, gold could take a hit. So given all this, what's your outlook for gold prices from here? Do you see this rally sustaining? Are we going to have a pullback? What do you think?
Excellent question, Jeremy. What usually happens in these severe market declines, we saw it in 2008 as also, you finally see when money managers have sold everything that they want to sell except the gold, then they finally say, we still need more cash. And then they sell the gold as well. Okay. But those declines are short term. Maybe they last 1 or 2 months, and then that gives you another great buying opportunity. But it can happen if there's a severe downturn in the general stock market. So this is something that people have to be aware of. People have to stop buying these double and triple leveraged ETFs. This is financial suicide. Most people, they sign these margin agreements with the brokerage firms without reading them. People can lose their houses when they cannot meet a margin call. That I saw that happen in 2008. We had lunch with a big Wall Street guy. He came to see us, and he said all the places he was traveling to. And I said, why are you traveling so much? He said, foreclosing houses. I said, but I didn't know you were in real estate, I thought you was also a stock business. He said, we're not in real estate, but these is liquidating margin calls. I couldn't believe it. He was going around the country foreclosing on houses.
Yeah, wild. It reminds me of, it's like almost time to watch The Big Short again too, Bert. Okay, we got to talk
Yes.
about then if we're looking at the stock market, we would be crazy not to talk about the miners because in your recent newsletter you noted that the recent surge in gold prices is not even close to being reflected in gold mining stocks, which you say have a big profit leverage at these levels. Walk us through how much more upside you see for the gold miners from here, but more importantly, what catalysts you're watching that could unlock the value because we haven't seen it all year.
Yeah, that's another very good question because if you take a look at the long-term performance, gold has outperformed the miners. Okay,
Mhm.
and so, but now we have such a huge gain in the price of gold, and the miners really don't have such an increase in the cost of mining. So basically, every dollar of increase in the cost, most of it is profit for the mining companies. So there's a big amount of so-called profit leverage, as I call it, in the mining stocks. Those big gains in earnings have not yet been reflected in the mining
Mhm.
stocks. They have not had their boom. That will come. That will come. But again, people will probably recognize it too late, and they will buy at the top. You never want to buy when everybody else is buying. You want to buy
Yeah.
before everybody else is buying. The central banks have been the big buyers and the only buyers, basically, for the last decade or 2 decades, probably. The public has not been out. I know some people that are in the gold business, and they say, it was just a couple of months ago, that business is dead. The
Mhm.
public does not want to buy gold or gold coins or anything that it's amazing. So there's still a ways to go, but don't be late to the party.